All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and this is your end of day market recap for Wednesday, August 3rd. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. And a pretty big day for the averages. After the last couple of days of chop and whipsaw type price action, we really got a nice rally out of that. And, obviously there were some events around that whipsaw type price action yesterday. But all in all, as we entered this week, I kind of thought that there was going to be some type of digestion, after the big move last week. So, even though that there were some events surrounding that yesterday, it still was basically what we were kind of thinking in terms of what we were going to get in the beginning of the week. Also, just to kind of recap a little bit of the beginning of the day, the economics that came in were pretty darn good. ISM services, 56.7, right? I mentioned kind of coming into this week when we did the TTG macro video over the weekend that this was going to be an interesting data point. It is something, there's so much attention that gets put on some of the economics. For example, last week, people were talking about, oh, we have GDP numbers out. Well, GDP is a lagging indicator. So it's really great for like cocktail parties to talk about what the GDP is doing. It's great for the media, but it really is not going to help you do anything in terms of, make any decisions in your trading. Not that the ISM service is going to make a big, decision for me, but it just kind of tells you, because this is a leading it. If you've taken economics 101, you know that ISM is a leading indicator, and it's still showing that the market is pretty darn strong out of the services index. And remember, we got ISM manufacturing earlier. I think that was on Monday, and that also was expansionary too. So these are not really, indicating that there's a contraction right now. So I think that that's pretty interesting, and the market kind of didn't know how to respond to that. Right now is good news, bad news, because the Fed is going to be, the Fed and their Fed speakers, which they're peppering us every day with about 2 or 3 Fed speakers, since they've come out of that their closed period, their blackout period, since the Fed meeting. It hasn't really changed. I show this almost every day, about what the market is pricing in. It's still 60 basis points, right? Exactly what it was yesterday. And then about 30 basis points too for the November meeting, right? If you watched my video yesterday, that was the same exact pricing. All right, so let's get into some of the moves today. A couple other themes that I see right now is that earnings are just coming in better than what expected. And, keep in mind, they're the level and the positioning of what the expectations were. The expectations were very, very low for coming into earnings. People really were worried about the big tech names. Remember from last week, a couple of them did miss, but they weren't as bad as feared, right? And this week you're getting some names that are having very good quarters. So again, that's an upside surprise. And again, the part that I think gets confused a lot from traders that I see on Twitter is they're not looking to see what the market has done this year, right? We're still down, double digits. The S&P is still down double digits for the year, right? So if the earnings are coming in, even if they're kind of in line, right? Well, some of these names, that's the overall market is down, 12 or 13% year to date. But some names are down 40, 50%. So, that's a lot of that is priced into the stock, right? So 2 things I think that are really kind of interesting with the earnings that we've gotten so far is that the expectations are really low. And then the second thing that you've heard me talk about in many videos is overall equity positioning has been we know that it's light, right? I was just talking about this in the trading room, and I tweeted this out, but this should give you a sense, right, of positioning. and it's just one fund. This is SQQQ. It's 3 times inverse the Qs, right? So it's you know, people who are really betting aggressively that the market is going down. And on the bottom right of your screen is all the inflows that we've been seeing over the last month. This is a record for inflows going into SQQQ. I calculated it earlier, and it's $1.7 billion, right? And they just added like another $120 million yesterday to this. By the way, this line is with the performance of SQQQ, and I just put in here also what the Qs have been doing, right? Because if you look at a long-term chart of SQQ, it's not going to look very good. But when you multiply that out, you know, if you take the overall delta, considering it's triple leveraged, right? $1.7 billion is actually 5.1 in delta, right? So that's their short position. In just this one fund, it's $5.1 billion. So when you have to start covering this, it can kind of create the type of market that we've been seeing over the last week, right? And again, because I get a lot of questions about this, and I don't have time to answer everybody's question on Twitter. But yeah, I mean, I use this as a contrarian type tool. The speculators, people who are using this type of a fund, usually aren't the most savvy in the world, right? And it's kind of the same thing when we look at S&P positioning, right? And when you see that all the speculators are short, right, that could often be, you know, you could categorize them as hedge funds or in that group of speculators too. Maybe not everybody in that group, but they're probably part of that group. But if you look at the non-commercial, right, positioning that's been going on in S&P futures, right, and this only updates once a week, and that's at the end of the week. But here's the maximum, right, sorry, this is 5 years. Right, here's the maximum, right? So this is as short as this has been since 2015, right? So it's got a lot of people caught off guard. They're just positioned wrong, right? Versus, you know, versus the market, you know, sometimes, you know, what we saw last year is that there's not a lot of shorts and there's a lot of over positioning, right? That's kind of what we had last year. Now we're at the opposite end of the spectrum. You know, things like this SQQQ, again, biggest inflows that this thing has ever seen before. So that's one of the causes, you know, is the positioning is just on the, you know, the speculators are on the wrong side of the fence again. And then, you know, the earnings are better than expected. And in fact, you know, there's so many names at this point that have had earnings gaps to the upside. I think I'm at 40 names on my list, somewhere around there. So I find that interesting. All right, so we've spent a few minutes here, and I haven't even gotten into any of the charts. Also, I think this is kind of interesting too, what's been going on with interest rates, right? They've been all over the place. At one point, the 30-year bond, right? So again, what we're talking about here is the long end of the curve. The Fed controls the overnight rate. When they talk about raising interest rates, those are short-term interest rates. What I'm looking at now is long-term interest rates. These are 30-year Treasury bond futures. And you could see that, you know, the price action today. So first of all, we're still holding the 20-day moving average, but all kinds of, speaking of that word whipsaw that I mentioned earlier, this was pretty good whipsaw. Remember, yesterday, I saw a whole bunch of tweets about, geez, what a crazy move that was in bonds. It's one of the biggest one-day moves. But you have to put things in perspective, right? We're just back to where we were last week. So I know it's great for the drama when you talk about like the biggest one-day moves, but it really, like yesterday's move just got you back into last week's range. So yes, bonds have been moving a little bit faster than normal. But overall, you know, they're still holding this 20-day moving average trend, right? Again, you know, bonds are important because if we start to see yields really take off to the upside, and that means that this line starts to go to the downside because we have an inverted relationship, of course, with bond price and what yields are doing. And of course, if you want to look at it in terms of 10-year, right? Some people like to look at the 10-year. That also is still kind of trending down in the short term from where we were, right? Below the 50-day moving average. Also, another thing that's interesting too, which I'm not sure how much attention this is getting, but crude has been breaking down, right? The crude has been kind of hanging around this 200-day moving average back and forth, back and forth. We had one day back in here where we really went lower, and we came back up and we took out this downside VPOC, which you hear me talk about just about in every video. An area of high volume that hasn't been revisited, often acts as like a gap. We went down here and we kind of filled this area, right? So took out, bounced off of an area where a lot of volume previously occurred, right? But now we're kind of moving back lower again. And that's the first really big close below the 200-day moving average since all the way back to December. Now, again, the level is much higher because we have a rising 200-day moving average, but this could be the start of a breakdown. Usually when you break the 200-day moving average, it's quite notable. On the other hand, nat gas was up today. I didn't see the reason for that, but that's still kind of hanging in there and still, I would say, pretty heightened. All right, so that was the worst, energy stocks were the worst performing group by far today. OIH, XOP down 2.5, XLE was down 2.8%. And then also solar was down. It's funny that these two groups have been kind of moving together recently, the solar clean energy as well as traditional energy. I think just the other day I was looking at both were up, solar and more traditional energy. A couple of names, and again, I talked about earnings gaps to the upside. I've got a plus here, but there's also some names that are missing, and when they miss, they miss really bad. SETG was one of those names, right? ENPH just knocked the cover off the ball, but SETG did not. Also, Generac, which I was interested to see what this name would do on earnings. And they have a big bearish engulfing candle. They're still holding support, but that's an ugly looking candle for Generac. So it's not an everything, an everything rally in this space right now. All right, so that's another theme of the day. So again, we're kind of getting some of these negative things out of the way, but on the positive side, cyber stocks were very strong off of this Ping deal, right? So there was a deal announced today that kind of got the whole group going today. Very, very strong. Like when you look at Datadog, which kind of brings me to the next subject, we're starting to see a lot of names get short covering before or are getting bought into earnings. We've seen things like, PayPal, follow through from yesterday. PayPal rallied a little bit into the earnings from the lows, right? Actually pretty decently from where they were, but they were up 9%. So you're starting to see all kinds of short covering. Look at what Wayfair did today, which reports tomorrow morning, right? Pretty good looking, chart, I would say too, for looking for a reversion, right? This chart pattern, by the way, we're seeing all over the place, right? Sideways, price type price action, a little bit of coiling with the moving averages, 3 moving averages wrapped around one another. And then we're starting to see that move back above the 50-day moving average and some type of retracement. So earnings can derail that move. But this will be one very interesting to watch at this point. And they report tomorrow morning, right? Possibly, maybe they could get up to 79 if they have somewhat of a decent report, because the short interest is so huge in this thing. I think it's around 22%, right? And of course, when you look at some other names that had momentum today too, Crocs has made this big move, right? Kind of the same thing, right? 50-day moving average crossing over the 20, and look at this thing go. One of the names that I talked about in yesterday's video was SE. Same, almost looks exactly like that Wayfair chart, doesn't it? Right? Sideways type action, really thin value area. So, that can indicate that a big move is coming when you've got very tight price action like this. It's very similar if you look at Shopify as well. Not exactly the same thing, but look at Shopify was up 11% today. Right, so same type of thing going on, right? And Stan Weinstein, who I love his book on stage analysis. You've got you kind of have your stage one going on and possibly your stage two, right? And bad news coming out in the stock rallies last week. That's a pretty bullish sign, right? Also, take a look at this. Take a look at the width of the value area, right? Indicating that at this point, a big move was coming. Look at the difference between the narrowness of this value area versus this one or that one. So, again, tight price action. All right, here's my trades for the day, which I always show. I was seeing a lot of setups coming into I was seeing a lot of setups coming into today. I had alerts. I was busy setting alerts last night. Unfortunately, this is sometimes what happens and can be a little bit frustrating, but I had about 20 alerts. All of my alerts went off in the first 5 or 10 minutes. Somebody asked me on Twitter, which again, I didn't have a chance to answer them. Well, what do you do when that situation happens? Well, you kind of have an idea, coming into the day, what your favorite setups are. And, I thought that the cyber names were something that could catch today. So I got into Sentinel-1, right, which did close. Again, similar looking, not exactly the same because the value area isn't as thin as those other names that I mentioned. But you got the same thing going on here, right? A nice base and price action trying to get above it. All right, so that was one trade that I added today. I did take a couple targets. I was worried about those ISM numbers, so I took a target, very close to where I put the trade on. And I think I took another target. Maybe I didn't take another target at the end of the day. I could have, I think, because it went over 27 bucks. But SE, I was able to take a few targets in that one today, holding the balance. Happy to kind of add if we get a little bit of volatility. Intuit has been another name. Right, I put this chart on Twitter as well. It's one of those situations. It's a little bit different looking chart, but I've seen this. And maybe I'm making a bad comparison here, but we've seen this H&R Block just go ballistic to the upside, and it's a different company. The valuation is much different. I think the PE is only like a 5 or something like that. So it's much cheaper in valuation. But I get why people, I kind of get the story of what's going on. People are going to need tax help, but I think TurboTax is better than H&R Block. I know, again, the valuation is much different, but I find it pretty interesting. All right, so I did, and I think I got a target in this one. I was looking for Deckers, which I've been long to catch, to basically break above this. This is one of the TTG earnings strength gap names lists that we have put out. And this one is trying to basically break above that gap and kind of put in a flag. So I'm being patient with that one. I did trade some Crocs today as a day trade. I thought that, I'm using the Virgin point of controls as places, even for a day trade to think where this is going to rally to. And we did take out that last VPOC. I didn't think it was going to get there. So I took my last position off, I think around 76.70 or something like that. 76.70, but nice little scalp trade. ICE reduced some of that, or the majority of that position before they report earnings, but that was a nice trade that worked last week. I substituted out of my LNTH position, which they report tomorrow morning. Because I just don't want the earnings risk. I'm happy to get back involved in it. And I instead put in AXNX. I'm still having trouble with this symbol, but this is the name that had really good earnings in the medical device group. Again, a pretty speculative name because I don't think that they're reporting a profit yet. Right? They certainly have sales, but they don't have a net profit yet. But I think the chart looks great, and they weathered the secondary. They announced a secondary after the close yesterday. And as long as this thing's above 65, I want to give this thing a shot to see if this can begin to trend and get out to new highs after those pretty stellar earnings. All right, guys. So that's the summary of my trades. And the one thing that I would say, I talked about in the beginning of this video about how I believe part of this rally has been fueled by all this short interest. But that's a lot of the times how rallies begin, is the shorts have to cover first, the longs then kind of run with the ball. But I still think being very nimble in this market makes sense, especially because we're still going through earnings season. We're still going to have Fed speakers kind of jostle this market and try to tone things down. But as long as there's good setups, then I'll continue to kind of be in this market. And I think we are continuing to see more and more participation. Again, it doesn't mean that we can't see a setback, but I'm not going to try to predict that. That's not my game. What I do know is that all the major averages are short-term trending higher. Again, short term, not long term. They're staying above the 5-period moving average. That was another thing that I pointed out too when I send out members index charts every morning. And that was the thing that I said about yesterday's price action. We didn't break the 5-period moving average, right? So that was also a nice thing. And, I'm going to try to stay in this market for as long as, ride this short-term trend for as long as it lasts. You have doubters every step of the way saying bear market rally, bear market rally, bear market rally. The consumer's bad, the consumer's bad, the consumer's bad. So there's still a lot of negative sentiment in this market, but I'll let the price action. If the indices start to break below the 5-period moving average, or if we start to see some divergences with breadth, where breadth really is not acting very well, and the market's going up, that would be a divergence. But I'm still seeing more advancing names than declining. So for now, I'm sticking with it. Have a great night, everybody. See you tomorrow.